Okay, so the earnings came out, initially spiked up, but went sideways, so did nothing. So the other one though, here was on the 3rd, right here, bad earnings, collapsed down and then trended down, right? So how can we take advantage of this post earnings? We could do a pairs trade. And in this example, Apple's very correlated, tightly correlated to QQQ. So what the trade setup was then was going to be short Apple and long QQQ, or long QQQ, short Apple. So let me show you what that spread did. So here's the spread on the next chart you can see, and here it was. Apple was at that point when the earnings came out, was right here. Apple was trading $152 per share. Actually, QQQ was trading $152 per share over Apple. Okay, so QQQ long, Apple short. Okay, so the spread was 152. Now look what the spread did. So then the spread, so Apple, I showed you on that chart, Apple gapped up, but it really pretty much trended sideways. Now QQQ though started trending up more. So you can see the spread then started moving up. So QQQ was stronger than Apple. And you can see that it got up to kind of this area right here, 183. So it went from 152 here up to 191, that blue. Okay, so the blue was 152, the entry, and it got up to total kind of right there about 191, right in there, right there. So that was a movement of 191 to 152 was your spread, okay? So if you look at that 191, and if you did this just 1-to-1, now we'll adjust these based on to make it more dollar equivalent. So that was a $39 per share increase. So if you did, per an option spread, that $39, one option contract equivalent to 100 shares. So this spread gave you the opportunity actually to make $3,900 just on that spread movement post trend. All right, so that would be doing it if you did this as a pairs trade using a synthetic option structure long short. And then you can see it also had another nice move here from that 3rd of August where Apple collapsed. You can see it was trading at 183 right here where that pointer is. Kind of put a bullseye on that. So it was trading right here after the earnings release, 183. And it went up here to that spread wide, and it went up to as high as 201. Okay, and again, that was being long QQQ short Apple. Apple was going down harder than QQQ, so that spread between the two blew out. So here in this case, it went from 201, increased from 201 from 183. So that's an $18 per share move, and if you did that synthetic, that would be $1,800. You're not exposed to overnight market. You're neutralizing the risk from anything coming out. All you're doing is playing the spread. So that's something I'll show you how to do in the course as well if you want to trade a post earnings trade, which are a lot of opportunities. You just kind of think about all the possibilities.